Today we are talking about trend lines, but not the boring textbook stuff you have heard 1,000 times. I'm gonna show you how to actually use trend lines the way real traders do, not the way trading books pretend the market works. If you are new here, welcome to the channel. I break down technical analysis, market structure, psychology, and everything you need to trade. Hit the like button, drop your questions below, and I will answer them. Alright, let's get into it. Trend lines aren't universal. Every chart has its own personality. Two traders can look at the same chart and draw two completely different trend lines. One says trend broke, the other says still valid. And guess what? Both can be right. Trend lines need personal calibration. You only get that after dozens of traders and reviewing what worked and what didn't. 2. Don't draw your trend line from the very first spike, that first dramatic high or low. Let the market from a second swing. Trend lines drawn from the second and third swings are way cleaner and give earlier and more reliable signals. 3. Use log scale. Seriously, unlike charts, structure forms more naturally. Breakouts show up earlier. Everything just makes more sense. 4. 2 points equals to draft. 3 points equals to real trend line. A trend line drawn with only 2 points is just a sketch. You don't trade off it, you don't react to it, and you just watch it. The third touch is where the trend line becomes legit. 5. Vex or bodies. Doesn't matter. Choose what reacts better. There is no sacred rule. Use whichever version gives cleaner reactions. Sometimes ignoring a VEC makes the lines perfect. Sometimes including it does. 6. Continuation versus reversal trend lines. Continuation trend lines break with the main trend. Reversal trend lines break against it. I personally prefer trading continuation breakouts. They are cleaner, stronger, and follow the flow of the market. Reversal trend lines. I usually wait for an extra confirmation, like a previous high or low breaking. 7. How to actually trade with a trend line. We don't do that. Price touch the line, let's buy or sell. That's how beginners blow accounts. Here's the real process. 1. Draw the trend line on a high time frame. 2. Drop to a lower time frame. 3. Wait for a local support or resistance break. 4. That break becomes your entry trigger. This gives you timing, structure, and confirmation, and you don't guess. Breakout trading done right. For continuation trend lines, I usually enter on the breakout or the first pullback. No need to wait for major highs or lows to break. I'm trading with the trend. For reversal trend lines, I want more proof before jumping in. 9. The 200 candle rule. This is something I personally use. Whatever time frame, I look at the last 200 candles. Why? Because a huge chunk of traders and bots use the 200 period moving average. So, I want my decision based on the same window of data. If the trend line spans more than 200 candles, I refine it on a lower time frame. 10. The angle matters. A solid trend line usually sits between 30 degrees and 45 degrees. Too steep equals to unsustainable. Too flat is not a trend. It doesn't have to be perfect, but staying in that zone filters out a lot of noise. 11. What makes a trend line trustworthy? A good trend line usually has clean reactions, minimal fake breakouts, visibility. It means lots of traders are watching it. The more eyes on it, the stronger it becomes. 12. How trend line actually form? Trend lines form because traders place order around them. In an uptrend, people stack buy orders above the line, creating support. When the line breaks, their stop losses trigger and push price lower. In a downtrend, the same thing happens in reverse. Trend lines aren't magic. They are just human behavior drawn on a chart. Every trend line is a footprint of collective decisions. When it breaks, the market doesn't change. Traders' minds do. Keep your risk controlled, your emotions in check, and see you in the next lesson. Goodbye.